Welcome to the Deep Dive. Today, we're plunging into the recent financial results and strategic announcements from CEAT Ltd, big player in the automotive tire sector.
That's right.
You know how financial reports can sometimes feel like, well, like wading through quicksand? Just numbers and jargon.
Absolutely. Dense stuff sometimes.
So our mission today is to cut through that complexity. We'll pull out the most important bits, the nuggets, and really show you what's interesting and relevant in their Q1 FY26 update. That just wrapped up end of June.
Exactly. We've got a stack of sources here, their official regulatory filings, the investor presentation, our own discussion points as well.
Right.
And the goal is to give you a clear picture of how CEAT actually performed, what their plans are, what it all really means. We'll dig into the key figures, the big strategic moves, maybe even a few surprising details, get a sense of their long game.
Okay, let's get into it then. Start with the big picture. How did CEAT Ltd do overall in this first quarter, Q1 FY26, ending June 30, 2025? Give us the consolidated view first.
Sure. Okay, consolidated figures. CE8 reported revenue of 3,529.4 crore.
Okay.
Which is a pretty healthy increase, actually, 10.5% compared to the same quarter last year.
10.5%, yeah.
And their net profit stood at Rs 112.3 crore. And just to clarify, consolidated means, the parent company plus all its subsidiaries, the whole group picture.
Got it. And what about standalone, just the core company?
Right. Standalone revenue was Rs 3,520.7 crore. So that's up 11.1% year over year.
Even slightly better growth there.
Yeah, just a tick higher. And net profit came in at Rs 135.4 crore. So, both consolidated and standalone show an uptick compared to Q4 as well. It looks like a positive trend.
So those are solid top-line numbers. What were the main drivers? What really pushed that growth this quarter?
Well, the management pointed to strong double-digit top-line growth, and it was driven mainly by both their OEM, that's original equipment manufacturer factory-fitted tires.
Right, the new car tires.
Exactly, and their replacement tire segments. And apparently the OEM volume growth was particularly strong across all the key vehicle segments.
Okay, so demand for manufacturers is looking good.
Seems like it, yeah.
But here's something interesting, maybe a bit of a twist. You mentioned strong growth, high capacity use, but operational margins dipped a little.
Ah, yes, good catch. That is interesting.
What does that tell us? Are they maybe prioritizing market share or brand building over just immediate profit right now, making a trade-off?
That's a really sharp point. The CFO actually mentioned this. He said Q1 is a marketing-heavy quarter with significant marketing costs associated with IPL, that Indian Premier League cricket tournament.
Ah, right. Huge event. Big marketing spend.
Exactly. So it's not just a one-off random expense. It signals a real investment in brand-building market presence. So consolidated EBITDA margin was 10.9%, standalone 11.1%. Both dipped slightly quarter on quarter because of this. And there is also a marginal drop in realization, even though raw material costs were pretty flat compared to Q4. So yes, I think you're right. It absolutely suggests a strategic push to grab future demand, strengthen the brand, even if it slightly dents the immediate bottom line.
That makes sense. Okay, so now we've got the overall picture. Let's peel back the layers a bit. Which parts of the business are really driving this? Where's CE8 placing its bets across its different segments? How does that mix look?
Yeah, they keep a pretty balanced mix, actually. The replacement segment, where you or I buy tires for our cars, that's 53% of the business.
The biggest chunk.
Yeah. Then OEM is 28%, and exports make up the remaining 19%. And the product mix is diverse, too. Truck and bus tires are 30%, two- and three-wheelers are 27%, passenger car utility vehicles, PCUV, that's 21%, then off-highway at 15%, and light commercial vehicles and others make up the last 7%.
So pretty spread out. Helps manage risk, I suppose?
Definitely. It helps them ride out ups and downs in any single segment.
You mentioned exports at 19%. How did the international side do, especially with, all the global economic uncertainty we've been seeing?
Right. Well, while domestic growth was strong, the international business volume was actually flat year on year.
Flat.
Yeah. They put it down mainly to those macroeconomic headwinds globally. It's not just CEA facing that, of course. But management did say they're keen to renew growth in those markets once the geopolitical situation stabilizes a bit. So they're still committed to expanding globally.
Okay. So marketing costs were a factor. What about other input costs? Things like rubber, steel, those can really swing things in the tire industry.
Yeah.
How do they manage those and overall cost control?
Yeah, good question. The raw material basket was, like I said, largely flat compared to Q4, which helps.
Okay.
But it was up compared to last year, and that did impact the EBITDA margins year over year. On cost management, though, the CFO specifically noted that efficient cash flow management helped in gross debt coming down by 100 crore during the quarter.
Reducing debt, that's
Yeah.
always a good sign. It really is. Strengthens the balance sheet, less reliance on borrowing, frees up capital for, important investments. They also noted some exceptional items, mainly compensation from voluntary retirement schemes, about 329 lakhs this quarter.
Okay, so probably some restructuring or efficiency moves there.
Likely, yeah. Usually a one-off kind of expense.
That financial discipline is interesting, which leads me to ask, what about spending for the future? Capital expenditure, investments. It sounds like they're gearing up for some serious expansion.
Oh, absolutely. They invested about Rs 231 crore in CapEx this quarter. And importantly, it was all funded through internal accruals.
So strong cash generation paying for growth. Nice.
Exactly. And a really big strategic move is the planned CapEx at their Chennai plant. They're planning to add about 35% to their current PCEV capacity there.
35%. Wow.
Yeah, investing around Rs 450 crores. Expected to be done by the end of FY 2027. This is squarely aimed at meeting future demand they see coming in that passenger car and utility vehicle segment. They clearly expect strong growth there. Makes sense. What's the current situation at Chennai?
Right now, the capacity is about 70 lakh tires per year, and they're running at about 80% utilization.
So they're hitting limits. Needs expansion.
Pretty much, yeah. They're being proactive about it.
Are there any other notable investments happening besides the Chennai plant?
Yes, a couple more. They put some additional money into subsidiaries recently. Rs 345 lakhs into Tyresmore Online Private Limited, and Rs 509 lakhs into PT CEAT Tires Indonesia. That was back in April.
Okay.
And this is a big one. There's that ongoing deal from December 2024 to acquire the Camso brand's off-highway construction equipment tire and tracks business.
Right, from the Michelin Group. That was a big announcement.
Huge, for $225 million. Now, that transaction is still waiting on regulatory approvals, so it didn't actually impact these Q1 results we're talking about.
But it's definitely a major piece of their future strategy, especially in that off-highway space.
No doubt about it. It's a significant move.
Okay, so connecting this back, $225 million acquisition, major plant expansion. How does all this ambition square with their financial health right now? What's the big picture on the balance sheet cash flow?
Well, like we said, the gross debt came down by 100 crore this quarter, and their leverage ratios actually improved slightly quarter on quarter. Debt to equity is around 0.40x consolidated, 0.41x standalone.
Pretty solid numbers.
Yeah, quite solid. It suggests their financial health is robust. And they also noted their listed non-convertible debentures are well secured. The security cover is over 125% of principal and interest, backed by assets at their Ambernath plant. So basically, they seem to be financing this growth from a strong, stable base.
Okay, so we've looked at the numbers, the investments, the costs. Let's shift to the outlook. What's the management saying about the road ahead? What's their strategy moving forward?
Well, Mr. Arnab Banerjee, the MD and CEO, he summed it up quite positively. He highlighted the strong growth trajectory and said CEA is, and I'm quoting here, well poised to ride the premiumization and electrification trend in domestic market and renew our growth in international markets with stability in geopolitical situation.
So premium products, EVs, and getting back to growth internationally. Clear focus areas.
Very clear. Higher value segments, capitalizing on that EV shift, and pushing global expansion again as things hopefully calm down. It's definitely a forward-looking statement about grabbing future opportunities.
And speaking of Mr. Banerjee, his reappointment was also announced recently, wasn't
Yeah.
it? His leadership seems pretty central to this strategy.
Yes, that's right. He's been reappointed as MD and CEO for another 2 years, starting April 1st, 2026.
Okay.
His profile, it shows deep commitment, over 30 years experience, background from top schools, Harvard Business School, IIM Kolkata, IIT Kharagpur, and he's apparently known for being customer-focused and bringing a sort of coaching mindset to the company.
Which could be valuable for driving innovation.
Yeah, exactly. And employee engagement, too.
So thinking about those broader trends, you mentioned EVs, premiumization. How is stuff like the electric vehicle transition or the big push for sustainability really impacting CE8's products and how they operate? Are they genuinely trying to lead here, or is it more about just keeping up?
That's a really critical question today, isn't it? Their strategy explicitly mentions riding the electrification trend. So that means developing tires specifically designed for EVs, which have different demands, higher torque, battery weight.
Right, different requirements.
Totally. And on sustainability, they've actually got some solid recognition. They were awarded an EcoVadis silver medal.
EcoVadis, okay, what does that mean exactly?
It's a pretty well-respected independent rating. That silver medal puts them in the top 11% globally for sustainability performance. It's a significant benchmark.
Top 11% globally, that's quite something.
It is. And they're also committed to setting company-wide emission reduction targets that align with science-based net zero goals, working with the SBTI, the Science-Based Targets Initiative.
Okay, so that sounds like more than just talk. It sounds like a serious commitment.
It does seem that way. It suggests a deeper commitment than just, superficial greenwashing.
That's genuinely impressive. Can you give us some concrete examples? How are they actually putting this sustainability focus into practice in their operations?
Sure. They mentioned around 42% of their plant power now comes from renewable sources.
42%.
And approximately 30% of the materials used in their tire manufacturing are now sustainable materials. They're also working on logistics. About 38% of their natural rubber is now sourced using alternative transport methods to cut down their carbon footprint.
Optimizing the supply chain too.
Exactly. And beyond operations, they're doing social things too, like tree planting drives, railway station beautification projects. And operationally, they've gotten other recognition too, named among the top 10 strongest global tire brands, awarded Procurement Team of the Year. So it feels like they're integrating it pretty broadly.
Right. So we've covered a lot of ground here. We've looked at the financials, the big strategic investments, the cost management, and this significant push towards sustainability. They're definitely looking beyond just the next quarter's results.
Indeed. It really paints a picture of a company positioning itself for the long haul, investing in capacity, global reach, premium products, EVs, and a more sustainable footprint. They seem to be playing a long game, balancing those immediate costs, like the marketing spend, with capturing future market share.
Okay, so here's where it gets really interesting for you, our listener, to think about. Given everything we've discussed, CED's big expansion in passenger and utility vehicle tires, their focus on more premium products, their clear commitment to sustainable manufacturing, and those net zero targets, how might their innovations in tire tech think about things like lower rolling resistance tires for EVs, or maybe new sustainable materials they develop? How might that impact the future? Not just for vehicle performance, but maybe even the environmental footprint of your own daily commute or your next road trip. How do these big corporate strategies actually translate to the rubber meeting the road for you? Something to mull over.